Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of August 10th, 2025. And in this week's episode, it's just myself, sprocket888, and I want to take a moment to kind of go through a day in the life for me and my trading. You know, a lot of people kind of might wonder, hey, how much time do you spend on this? What's your routine for this? And really, I want to just kind of go through to answer these questions of about how much time I spend prep working, trading, actual time commitment in a week for the things that I do. And one of the things that I think is really, really important as we approach those is really to have established routines and consistency for those routines, which generally I do. And that's what I'm going to kind of walk through in this week's episode. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you'll find a link to thetagang.com/sprocket888 as well as /ViperXL007, where Viper and I post each and every one of our equity trades, the good, the bad, and the ugly. This show is also available in an audio-only format wherever you get your podcasts. So look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's content. So this week, I wanted just to take a quick break here from kind of different earnings trades and strategies and actual tactical things that we're doing, and really just kind of talk a little bit about how much time do you spend trading, or how much time do you spend prep working? If you were to look through there and try to pencil out, you know, what is your time commitment on a weekly basis to the things that you do for Blockhead Traders in your actual portfolio. And that's really what I want to take a look at, because I think that is an area where a lot of people might make excuses for themselves to say, oh, I don't have time to do that. Oh, that's a full-time job. I only can give, you know, just a tiny amount of time. There's no way that I can ever put the amount of time in it to really do it right. And I think that's kind of an excuse that a lot of people end up using, which keeps them away from the markets, and it keeps them away from kind of that wealth building. And that's really what I want to kind of lay out and talk about in this week's episode is what is the practical time commitment that I give each week to trading, and what does that entail, and what are the different aspects of it. So before we hop into that, I do want to preface it with 2 points. One, what I'm going to cover is really only about the actual trading content and the actual trading research. I'm not including anything I do for kind of show production or recording or anything like that, because that time commitment is completely separate and quite a bit more than just the actual trading. The other big caveat that I'd say is there was a little bit of legwork that went into getting to this point. Now, what I would argue when it comes to that is that really shouldn't be a deterrent for kind of embracing and challenging and working towards this. So while I did spend a large amount of time kind of watching different YouTube videos, reading different articles, playing around with paper trading and experimenting before I actually kind of finally dialed into the strategy that I have, I really think all of that work can fit into a time commitment and carving out of any number. What will happen is it just that the amount of time, or the amount of the length of time it takes before you can kind of get through all that will vary based on how much that you can contribute on a weekly basis. What I mean by that is, let's say it would take 100 hours to do back, you know, getting up to speed, learning this nomenclature, learning this naming convention, learning the strategy, researching what's an option, blah, 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 blah. So let's say it's 100 hours. If you could give 20 hours a week, you'll be done a lot faster than if you could give 1 hour a week. But that type of content and that type of learning doesn't really change. So it shouldn't matter how much time that you can carve out leading up to you to have enough confidence to start engaging in trading. So the distance from when you start to when you start learning to when you start trading might vary based on what you can carve out in a week. But I don't think that should be a deterrent, because there really is not a, oh, you must give X number of time per week to learn or things like that. So what I would say is, I'll talk through what I spend in a week, and that's kind of a dedicated time that I have to carve out each week to kind of continue playing the game, if you would. So if that is an amount of time that you think you could carve out, then simply just use that same time carve out prior to engaging trading and use that for all of your learnings, all of your research and stuff like that before you actually engage, because then you will have already built the habit of blocking that time and blocking that routine. Because all of the things and research leading up, none of it had a prerequisite of it must be done during these certain hours. And you'll see that in my trading strategy, there's really nothing that must be done during certain hours. There's things that are a little bit easier, but really it's very, very, very short. So those are the kind of two prerequisites that I really want to get out of the way, is that this video and the time does not cover anything to do about show production, blog posting, any of that. It's strictly based on trading. And the second one is none of this time actually accounts for any of the lead up time that I spent getting ready to start trading. But once I've established my mechanical nature, this is kind of the normal operating speed of the machine, if you would. All right, so let's hop right into it. And the first thing I want to do is I want to talk about kind of what I would call the big rocks or the big themes of what I spend time on before we actually call out the actual time. And these are the themes are really around the big rock strategies that I like to put in my portfolio. And again, this is all for trading. Doesn't really count for kind of retirement investing and things like that, which is a much less time commitment that I have, and it's only done quarterly, but we're not really touching on that. So the first thing I would say is the bulk of all of my trades are around earnings. You will look back in our back catalog and you will find countless episodes around earnings, because that is the primary strategy that I deploy. That is the primary thing that I'm doing every week. Now, there are earnings 4 times a year, and each of those earnings periods last for about 6 weeks, where there's a good number of trades to take. It can really vary based on how the companies are spread out over the earnings announcement season, but on average, I would say it's probably about 6 weeks of very intense, very heavy volume of earning announcements week after week. And so if you multiply that out, right, 6 times 4, that's a good chunk of the 52 weeks in a year. So the next area of trades that I take, which all of these will roll up into the same amount of time that I spend each week, but they just vary on what type of trade they are index options. So these I don't take a ton. I usually look for them to balance out portfolio deltas. And if I look at my portfolio, I like to try to keep a zero delta weight on it, which means I don't really want my portfolio bullish or bearish at any one time. I try to keep it delta neutral, which means whether the market goes up or the market goes down, I really don't want that part of the market to influence my portfolio value very much. And so what I will do is after, several earnings trades, busted trades, things like that, when I get assigned things, my portfolio will inherently start to carry a bias. And it will carry a bias to the bearish side, or it might carry a bias to the bullish side. Either way, once that portfolio starts to creep to the boundaries of what I consider delta neutral, I want to neutralize that delta. I want to counterweight it with something else. And that's typically what I'll do with the index options. And so a lot of times I'll do this with futures. I'll go into the futures of the Russell is my favorite one to use, although the SPY can also be used. I don't usually use the NASDAQ because it's typically tech weighted, and so it does carry kind of a bias of its own, where I feel both the Russell and the S&P are kind of broad indexes that cover all different categories and segments. And what I'll do is I will play an option play that counterbalances whatever delta bias is in my portfolio to kind of neutralize it out. And if I have to move with very heavy deltas, like if I'm way, way off on my deltas, I might put in raw futures. And the reason for that is the futures products themselves are very, very large. So they have a very large notional value. So they can really lump in some serious weighting to your portfolio if you need them. Think them like a heavyweight counterbalance. Now, normally I use the options on futures because the options are you can kind of control the weight that they apply based on the delta strike that you use of the option. So, you can go anywhere from like a 2 delta to a 98 delta. And then, of course, the higher the delta, the closer to the raw future you are. So when I want to, fine tune the weights that I apply, that's usually where I'm using the options because I can kind of dial back that size or adjust that size. So the only other thing is I typically only add these when there is good volatility on index futures. And for spot volatility, this is not IV rank or anything. This is actual volatility of the option chain itself. I'm really looking for better than 20%. Which is a large part of the time, but not all the time. If you get into a really long bull stretch, that volatility can drop in the 10 to 18% spot volatility, and I really don't typically sell that. So the next thing that I'll look at, and these are all kind of in order of descending frequency. So the most frequent is at the top with the earnings trades. The next frequent are index options. And then the next frequent are abnormally volatile stocks, individual stocks outside of earnings. And what I mean by that is when I have extra capital to deploy, and there are no earnings trades going on, and I don't need to deploy any delta weighting or any index futures options, I'm going to look for individual names that are abnormally volatile. And it kind of just fills the gap time, if you would. This doesn't happen incredibly a lot, but like I mentioned, the earnings season doesn't go for 52 weeks out of the year. So if I'm in those interim times and I have extra capital to deploy, I will start looking for individually volatile stocks that are just overextended for one reason or another, not for a binary related event like earnings. So that's the distinction there. Is it's just kind of an elevated volatility in a particular name. So I typically tend to be very distressed names or very memey names that will have this elevated volatility. And that's another sector that I kind of look into. So that's kind of the third thing that I look at. And the very last one that I spend time on, and this is more irregular because it really depends on how many of my trades have been busted or in a management state, and that's to manage open trades. So every trade that I open has a strategy, and there's an exit plan, and sometimes that exit plan doesn't allow me to exit, and it goes into a management strategy where I'm rolling, or maybe I got assigned and the stock plummeted and I've got to figure out when I'm going to sell the covered call or the put to get assigned back out in the wheel strategy, depending on which direction it goes. And this is really about spending time looking at those type of trades to figure out how do I battle back, or am I reaching the point where it's time to cut the loser, take the loss, and move in, throw the towel in? And so these are the four things that I'm really looking at when it comes to the time commitments that I'm going to go over next from here. And they basically weight from top most frequent to the bottom is the least frequent. All right, so how much time am I spending? 40 hours a week? Is this a full-time job? Am I got 57 monitors where I'm watching all these tickers? Am I locked in from 9:30 to 4 p.m. every single day? No, absolutely not. And that's really where I'm going to bring in my typical week. And I have a full-time job. This is a pastime for me. This is a secondary stream of income. This whole trading strategy is about building wealth for me personally, and building an established process that's maintainable into retirement as a secondary income stream from all the other preparations that I've had. And so it's always needed to be a minimal time commitment in a week because this is not my primary focus. This is not what I do every day. And I just don't have the time in the week to really put that much time into anything. And so what it really comes down to is I broke it into three areas of time that I spend. And each of them, I put a rough estimate about what that time is a week. In most cases, it's less than this. So I've put this number relatively conservatively, just because, for example, research. I put 2 hours a week. This is when I'm looking for new trades. I'm planning execution. Typically, I do this on Saturdays and Sundays. The market doesn't need to be open. All of the numbers that I use for my broker and everything, they're all available 24/7. So you're not locked into a particular time to take that look and take that screening. This time also includes kind of checking in on the names throughout the week. And the reason I say that 2 hours is very, very conservative is because there are many weeks where I spend 30 minutes. It really goes down to what is on the docket. And so I would say that this 2 hours is more of a high watermark. So for example, there's periods of times when there are no earnings coming up next week. So I go to look on Saturday, Sunday, and there's maybe 3 names and none of them look like it, and I'm done. I might make a decision to say, do I want to play something else? But most of the time, it's probably just a wait and see. Now, when we pull up like this exact time we're in right now is the height of earnings season. And so when I pulled up my screener this past weekend, I had, I think, 168 names to look through for earnings that were coming out this upcoming week. And that took me a little bit of time to flip through. Now, I'm relatively proficient at flipping through, and I really only take a detailed look of, 20, 30 names on that list. But that's where that time commitment is the bulk of that is on that Saturday and Sunday prepping the list of execution. And so I'd say probably a good hour and a half is that prep the list. And so what I do is I actually open up a little sheet. And as I'm screening, I write down the tickers that I want to take for earnings. I write down what day the earnings are, and I write down before or after the bell. This list I share in the Discord pretty much any week that I have it. I just say, hey, here's what I'm looking at this week. I will take that list, and if there's any notes to say, hey, only do this on a bull side, only do this on a bear side, whatever, I make that notation down. From there, the other time, and this is one of the only time commitments that it is to necessary to be there at a particular time, is during the market open. Well, not during the actual open, but while the market is open on Monday is when I place these trades on that list for the week. Now, I will typically do it at lunchtime. At my lunch break, I'll kind of, eat my lunch. I'll pull up my mobile phone. It takes me, depending on how many trades I have to enter, it usually takes me about a minute or 2 minutes per ticker. So if I've got 8 tickers, it's probably going to take me about 8 to 16 minutes to input those orders and get them all filled. So that is one thing. You could technically create those orders outside of market hours, but the actual pricing really changes a good bit once the market is open, and I want my strikes to be at a particular delta. So I will only enter trades when the market is open. I don't pre-fill those orders, and that's typically on a Monday. Now, the other thing I do with that list is I kept track of what days those earnings are and whether they're before or after the bell. So I then pull that list out every single day and I say, okay, what earnings just happened? And that's when I look, and it doesn't have to be exactly on open. It doesn't have to be during, but I try during the trading day after a particular earning. So again, it typically tends to be lunchtime. I will pull up the ones that had just had announcements and see how they're doing. If they're hit my price targets, I will close them out and move on. If they're not, I'm going to keep waiting in that week to Big Friday roll day. So almost all cases, I will wait until Friday to roll. The only time I deviate from that is if something is massively, massively, massively breached and in the money. I might roll on a Thursday. But generally, that is the monitoring during the week that I'm talking about. That's, popping up your mobile phone. Your portfolio, your broker will already have all your names. It'll show you your percentages. It takes literally about 3 to 5 minutes of glancing down. That's there is the monitoring during the week. Now, the other thing that takes a decent amount of time each week is the journaling, the recording of the trades. This is very important, in my opinion, to really be able to reflect back on your performance, to say, hey, what worked well, what didn't work well, is the actual recording of things around the trades. It probably, I spend about 30 minutes a week doing this. This doesn't have to be during market hours. This typically I put this in the evenings. I just kind of say what happened that day, what trades did I put on, why did I put them on, what trades did I close, why did I close them, what was interesting about them, just an individual journal record on each trade, how it's going, what went wrong, what went well, that type of thing, so that when I'm doing more kind of reflection back or retrospection on things, I can pull up all this journal and see all these data points. Now, it does take a good bit of time to jot these thoughts down. So that is about 30 minutes a week that I spend kind of on that recording phase. Now, the last bit of things that I spend time on are what I call managing. Now, this is very irregular because this really means that it only happens when I have trades open that have been breached. They're in a management phase. They're kind of reaching, what do I do? Different theoretical maneuvers and things that I could put on them, assessing, basically deciding when to throw in the towel. Now, I have predefined markers of when I do this, but when you roll, it kind of creates a situation where you have to look back, add up all the credits you've received. How does that fit into the overall strategy? Where's that breach at? Where's that, are you going to throw in the towel? So occasionally, and the reason this isn't really kind of added up to exactly 3 hours a week is because I very rarely have kind of this management phase, but this is a separate session that I kind of do, usually on the weekend again, or in the evenings, where I go through hypothetical what ifs, what's the probability here of this, what's the chart look like for this ticker, as I'm kind of managing those open trades. It doesn't happen very often, but I would say when it does happen, it is a dedicated up to 30 minutes per ticker per week of when you manage. And that management isn't every single week that trade is in management. It's really what am I going to do for the next chunk of time? And mostly my management strategy is monthly based. So I might put a study on and decide what I'm going to do, and I'll do that, put that trade, put that modification in, and then it will need relooked at in a month if the trade is still open. And so, yes, I put 30 minutes a week per ticker, but that's not per the ticker that's there into perpetuity. It really is based on when those next touch points are for the management of things. And some management is very fast and doesn't take 30 minutes because I already have predefined this is what it is. Some of them take a little bit of calculation, the ones that have been rolling, the ones that have been ongoing for a while, that really just don't push into that throw in the towel because that kind of dynamically changes over time. And it takes me a little bit to kind of add it up and get that into perspective. So all in all, if you add up all this stuff, I would say on average, I carve out a time commitment for my trading of a conservative 2.5 hours a week. I would say only 45 minutes, 30 to 45 minutes of that is actually needs to be taken while the market is open. And in any one given day, that's really probably 5 to 6 minutes on your phone to execute a trade, to close a trade out. And if you think about your day, and you can probably be in any job role out there, and I bet you have 5 to 10 minutes to pull out your phone and scroll through Instagram or scroll through, whatever social media feed you look at. And so to me, it's really the same thing as that. It's this quick time to pull out your phone, scroll through your mobile broker, execute a trade if you need to. And that's really the time commitment during the market hours. That's probably the most limiting factor of things. But it really, really is not a huge time commitment. Like I said, 30 minutes, 45 minutes a week, tops. The bulk of all the other time of that 2.5 hours is really weekends, evenings, anytime that you can carve out for it. Can be during market time if that's when you're free. But that gives you the flexibility for the rest of your week on how you carve that out. So, just think about how much time do you spend watching something on Netflix or watching something on YouTube or all of the things. And you can do this in any amount of time chunks that you want. And so I really don't believe that 2.5 hours a week is that big of a hurdle when it comes to time commitment. I think that's very doable to carve out if you are really interested in this type of thing. And like I said, you probably can do it in less than that. As your portfolio grows in size, that time commitment does change a little bit. I would say with a very small portfolio of under 15,000, under $20,000, you probably could take that number and divide it by at least two, maybe even shrink it by more of a percentage, because part of what takes so much time is how much capital do you have to deploy, because the amount of capital that you have to deploy will dictate, based on your position size, how many positions you can have open. And so if your portfolio is of a size that and your position sizing that you put out is one that says, hey, I can only have 10 tickers open at any one time based on position sizing, based on risk mitigation. If your portfolio is full, you're going to get to that week and you're going to say, well, I've got no capacity, so nothing to do next week. That's the same thing for me. So if my trades stay on longer than expected because they've breached, because I've gotten assigned, I have to adhere to my portfolio allocation and my position sizing. And so those very well could be, I might be full. And when I'm full, I don't spend 2.5 hours a week. This 2.5 hours a week, like I said, the bulk of that is that research for new trades. And if you don't have new trades, then that time is just not there. So that brings us to the end of this week's episode. This really just kind of touches on what is the practical time commitment that I put forth in trading. How might that be reflected to you, and how much time commitment you need to put into things to kind of mimic or style or go after that. And hopefully this video has shown you that it really shouldn't be as daunting as one might think. Sure, if you don't have a lot of the background and the knowledge going into it, you have to go through a learning phase. However, that learning phase really doesn't need to be, I have to learn it all in a month, or I have to learn it all in a week. However much time you can carve out in a week, carve it out, be consistent, be diligent to get into that habit. That habit of consistency and carving out that time is going to be the key to the success of things. And as you go through it, you'll reach a point where you then feel comfortable enough then to start engaging in the trading, engaging in the strategy. And while mine is about 2.5 hours a week, conservative estimates, so that's on the high side, based on your portfolio, it might be less than that. So like I said, a $20,000 portfolio might not be able to put anywhere as many positions on that I am having in mind. So your screening, that weekly time, is going to be very, very much abbreviated depending on how much free capital you have at any given moment. So really being able to carve out that time. And if you might think, oh my gosh, that's so much time, but put it into perspective of, think about the other things that you do in a week. Think about all of the little times that, you're flipping out your phone to scroll through social media, or to just kind of surf the internet for different various topics of interest, right? Think of all of the little 10-minute breaks and things like that, where you can kind of fill and stuff that with different learnings. If you have a commute somewhere, what do you listen to on your car when you commute? Maybe you put that in as some sort of podcast or learning or audiobook on this strategy, on trading, on markets, right? Think about where you can forcefully interject that in multitask different things. Do you go to the gym? Do you listen to music when you go to the gym? Maybe you substitute that for listening to things. Try to figure out where else you can consume information to kind of get that learning up to speed. And then once you have it, it really is just about dialing in that strategy and carving out that time to kind of iteratively and repeatedly go through the same process and routine. Well, that's all. And the volatility and the markets are really starting to move and jump around out there. So hopefully you're finding things that interest you. You're finding things that fit your trading strategy. Good luck out there. Have fun. And remember, think outside the block.